Alright guys, welcome to a brand new video today. Alright, today we're going to talk about 3 stocks to buy and hold long term as we fear signs of growing recession. Ooh, scary. But yeah, definitely when there's signs of recession, you got to think of stocks you want to hold through a recession, that if there's a recession tomorrow, you won't care, that you'll hold through it, and that you'll buy and hold long term, which is eventually the goal. So we're going to be looking at 3 individual stocks today, no index funds. It's going to be lots of fun. So, okay, for this first stock today, we're going to be looking at Coca-Cola. Ticker symbol on this is KO. Currently pays a 2.67% dividend at the current price level. So why do we want to invest in Coca-Cola? Well, first off, the reason is because it's a very stable industry, the drinks industry. And you may think in the current landscape of being very health conscious, people are declining and drinking soda. And that is true, but people are drinking less and less soda as the days go on. But Coca-Cola is a Goliath company that has managed to diversify itself into many different drink lines. So, for example, they own Minute Maid, which makes all types of juices and stuff. Which, you know, people are still health conscious of juices, but a lot of people still tend to drink juices with breakfast. That's a very big part of their business. They even do own a water brand, which people are going to be drinking water for until the end of time. So that's a great way to diversify themselves, which the water brand they own is Dasani, which I'm pretty sure most people know what that is. They own obviously other soda companies such as Fanta, and they even actually make Bacardi mixers. So they even also have a kind of an investment into the alcohol industry. Not really, since they're not actually making any alcohol. But it just shows that they're even trying to bounce onto that side of the platform. So they really try to diversify themselves to survive any type of headwinds that they may encounter from people trying to be more health conscious, which is very important when you're trying to invest in a company through long term, through a recession. And definitely in a recession, people are still going to be drinking liquids. So very important to realize that. So there's definitely a lot to like about Coca-Cola. Obviously, Warren Buffett is one of the biggest investors in Coca-Cola. I think he makes over $1 million in dividends per quarter on his Coca-Cola shares. He's had his shares since before 1990. He's on the board of directors. He's even appeared at the shareholder meetings to make speeches. There's like a famous video on YouTube for that. So and he's never sold a single share of Coca-Cola. So even one of the biggest investors in the world is on this bandwagon. So there's a lot to like when it comes to Coca-Cola. I currently own a position, not too large a position, but I bought at definitely a lower level than this, and I like the dividend at that price point. But now that I've seen just how big of a Goliath it is, I definitely will be adding on to this position, probably with the dividends I get from my current shares. The PE ratio is actually decently higher than its competitors. It's like above a PE ratio of 26. However, so the stock seems a bit expensive. However, when it comes to a company like Coca-Cola, I think it deserves that premium because it's just such a Goliath that will stay around for a while. Alright, so the next stock I'm going to talk about, I feel like I need to include a foreign stock on this list. So the first stock was a dividend-paying stock. Now we're going to look at the foreign stock, and that is Alibaba. So when it comes to Alibaba, the reason why I say you should buy and hold this stock long-term is because they basically have, they don't have a monopoly on the e-commerce space in China because there's many other competitors like JD and Tencent. But, however, Alibaba owns multiple websites in that space. So they own like Taobao, Tmall, Alibaba, and then AliExpress here. But the reason why that's important is because websites like Taobao and Tmall, I don't know exactly what the difference is, but I know that one of them is similar to eBay, and then Alibaba is the wholesaler. So they own different parts of the supply chain, and they own different websites that we would that has equivalency to websites that we think about. So they own multiple of those websites, and that's just through one company. But I think more and the e-commerce space in China is only going to keep growing as more and more people are let onto the internet. I believe that there's even though there still is a massive population of China on the internet, there's still hundreds of millions of people that don't have access to the internet yet in China that probably eventually will. So their consumer base in China actually only grows. And again, like I said, with AliExpress, which is here in America and other parts of the world, they do have a broader market that they can give to. So it just shows that because they have that dominance in China and broader appeal, that e-commerce business is just going to keep growing because like people are making whole businesses through e-commerce, through Alibaba. So the fact that more and more people are moving towards e-commerce is just going to keep on growing their sales. So let's talk about other factors though that I really like Alibaba for, and that is Alipay. Alipay is currently the largest fintech company in the world. Yes, bigger than PayPal, bigger than Square. Alibaba has the largest fintech company in the world. Even here in America, you can see a lot of places that you can pay with Alipay. And I don't know exactly everything that Alipay is doing, but just the fact that they that people believe the valuation of Alipay alone to be over $120 billion, it just shows what a Goliath of a company this is, because that's just one small portion of their business. Because when most people think of Alibaba, they think of the e-commerce websites. They don't think of Alipay. But Alipay is even becoming common here in America. And in China, like everyone pays with their phone. They typically pay with WeChat on their phone. But because Alibaba is so big, then and Alipay is so big, I don't know exactly what the percentage of people using WeChat to Alipay are. But Alipay is just huge business and huge forefronter. Alibaba is even going into other businesses like hotels and stuff, where they're actually like testing facial recognition on people, and they're like sending those results over to like the government. I don't know, it sounds kind of scary, but the fact that they're testing hotels and they're like working for the government, that's actually good in terms of profit value. So yeah, they're using these hotels to test these new features of surveillance, and the fact that they're even opening hotels, and they're opening nicer hotels, it's really cool. They also even own their own grocery stores too, where you can have like a robot deliver you food, which is really cool because first of all, the robot delivering food is saving costs on their side, so the food is actually cheaper when you buy it at the restaurant. But they also do have a full working staff that delivers the food, and that gets deliveries ready for people that do order at the grocery store. So they own a huge portion of this. They own e-commerce, they own hotels, they own Alipay, they own restaurants. And people are saying that China's gonna become the next big superpower, and if that's true, then Alibaba will only continue to grow, as it is still the largest Chinese company. It'll only continue to get bigger. So there's definitely a lot to like when it comes to the Alibaba story, and it's definitely one that I plan on holding. And I'm not an economics expert, so I don't know if if China will become the next big superpower. But all I know is that no matter which direction the world goes into, Alibaba will continue to grow as a company. So let's talk about our last stock. So we went through a dividend stock, a foreign stock. Now let's talk about a domestic stock that isn't a dividend stock, but I plan on buying and holding long term, and that is Google. Google is currently it's not my biggest position, but if someone asked me what would be the one, if I could only own one single stock and never buy another stock for the rest of my life, it would be Google. And that is for a very simple reason. One very big simple reason. They have a monopoly on search, on data. And in the new digital world, the most important commodity is data. And nobody has more of it than Google. Obviously, there's other search engines besides Google, but the vast majority of people use Google. And I don't see that changing anytime soon, because Google is just so ingrained that like you can use Bing, yeah, you can use Yahoo, but nobody uses those services anymore. Microsoft put in hundreds of millions of dollars into investing into Bing, and they haven't even been able to crack at what Google's been doing. So it's just that's so important. Like, search is so important of an industry. And when you think about Google, you think about how they get the revenue, and that's advertising. Currently, they're in a duopoly in terms of online advertising with Facebook and Google. I think the two companies own around 75% of the online advertising market, and Google is actually above Facebook in terms of their revenue, which kind of makes sense because Facebook, the ads are on the social media website, but Google gets ads from AdSense and all throughout whenever you just search on Google, which makes sense. But the fact that they do own such a large majority of just online advertisement, and that's where like the world is going online, just makes it like immune to any kind of economic headwinds that I could possibly think of. Because if there is a recession, I mean, more people will just be going on the internet, which, I mean, advertising dollars will be down in a recession, but I don't see the internet vanishing anytime through a recession. And just the company is just such. So when we talk about another big portion of their business, let's talk about YouTube. YouTube is how most people how many people consume media nowadays. You're watching this on YouTube. I've been watching YouTube more than like any other kind of TV since I was like 9 or 10, and I'm almost to be 21 now. So I've been watching YouTube for years and years and years. I just know how powerful of a platform it is and how long it'll be to stay. When you think about the fact that most of the people that have been watching YouTube as a majority of their sources are around my age and haven't even gotten older and older, then you just realize that YouTube's only going to grow because more and more of the new generation is just going to be watching YouTube, and YouTube's going to be like a staple part of every single, like, staple part of the media within the next 20, 30 years, because the generations that grew up on YouTube are just going to get older and older, and the new generations are going to grow up on YouTube. So that's just one portion of their business, and again, it's a very smart portion of business. Google's a very smart company. When you look at other parts of their business, like, they bring internet to people through balloons. It's like the definition of a futuristic company. And when you think about more about a futuristic company, there's another part of their business that's definitely going to be big for the future, and that's Waymo. Waymo is their self-driving company. So I don't know exactly how big Waymo is going to be as opposed to like Tesla, or in terms of other self-driving games. Uber is even going to be in the self-driving business. So I don't exactly know what Waymo's plans are, especially because Google's been pretty secretive. But actually, Waymo has a current valuation by a lot of analysts over $180 billion. And that's just one portion of Google's business. And they've already reached over the $1 trillion market cap. Google has a lot of capital to invest in this. So if Google really wants to become a big player in the self-driving game, then they can. And they were one of the first companies to actually have cars going on the roads of California. So they do, even though they don't have as much data collected as Tesla, they still have a large portion of the data. So yeah, that's why I think you should invest in Google. Ticker symbol on that is GOOG or GOOGL. Alright guys, so that was the video today. I'm going to make some hot new videos soon. I don't know what, but definitely catch on more stock videos. Oh, yeah. I'm going to be uploading a Taiwan vlog soon. So like, comment, favorite, subscribe. See you guys later. Colin Dinsmore out.